Hello, hello, and happy fall. Could you believe that it's fall already? Before we know it, it would be Thanksgiving. And, once Thanksgiving is here, then Christmas is just 1 month away. Then when Christmas comes around, it's already a new year. But, anyways, happy fall. It's sweater season. Can you see this? Am I holding it the right way? It's sweater season for those of you that are further north. For us here in Florida, it's still summer. It's always summer. It's always summer. Anyways, come on in, come on in, come on in. Thank you so much for stopping by to watch my podcast. Now, if it's fall, that means it's Q4 for us business owners and entrepreneurs. And maybe the non-business owner, it's the end of the year. We're getting ready to start the new year. So whatever it is for you, sweater season, fall season, autumn, Q4, oh my gosh, it's the end of the year and I haven't even got to half of my goals, whatever you call it. I want to say happy that to you. I'm so excited. So on this video today, I want to talk about credit. Let's talk about credit scores and how it affects us. So, do you know your credit score? Is it good, bad, in between? Is it excellent? Is it poor? Do you just not know? If you don't, that's okay. Stay until the end as we go over what is credit score. We'll actually explain the numbers, the factors that will affect you, what lenders are looking for, and how your credit score contributes to your financial health. Well, hello, hello, hello. If you're new here, my name is Paulette Rolle-Alesnik, and on this channel I talk about personal finances. That is how to make extra money, how to create and develop multiple streams of income, and how to increase your wealth. That is the theme, the mantra of this station. We want to grow financially in every area. So thank you for stopping by. So let's start. Now, if you have questions, please put them in the chat. So whether you're watching this live or later on YouTube, I would always get back with questions. So if you have a question regarding credit, please put it in the chat. If I can't answer it, I do partner with other credit experts so that we can get the answers to you quickly. So what is credit score? So credit score, I'm talking to those in America, right? So credit score is a number designed to represent you and how likely you are to pay your bills on time, repeatedly, ongoing. So it's a number that represents you and your payment habits. So if you do not know, if you want to get more information as to exactly the major credit score organizations, I want you to go to creditkarma.com. So they will explain in details about credit. But credit score is really just a number that helps determine how you pay your bill. Now, what is the range when it comes to credit? A credit score can range from 300 all the way up to 850. And you want to kind of be in the middle. I'll explain where it is, what the numbers means exactly. And you tell me where you find yourself and whether you want to increase that, okay? Hello, hello, hello. Please be sure to put your questions in the chat. Now, what does it mean? What does it mean to have the numbers? Now, here's what lenders are looking for. When we apply for credit, lenders are looking for a few things. Okay, so it's not just your credit score. Credit score is like our reputation in the credit industry. So the lenders are saying, okay, how does this person pay their bills? How long they've been paying this? Are they just doing this the last 2 or 3 months? to impress us in order to get a home, a car, whatever it is you're trying to get? Or is this something sustainable, right? Do you have that longevity of credit history? The better your credit, the higher your credit, the better. There's more benefits for credit for the terms that a lender is willing to give you. The numbers. Tell me where you sit as I call these numbers off. Like I said, credit score can range from 300 all the way up to 850. So if you have a credit score between 300 and 579, not so good. We got to work on that, right? So if you're in between 300, 579, they call that poor. We need to work on that. If you're at 580 to 669, that is fair, right? They see that you're taking steps, you're getting there, you're doing what it takes to get there. And I'm going to come back and go over all of these because I have been at every step, meaning 300 and all the way up now to almost 800. So if you're at 670 to 739, this is a good credit score. In fact, the mortgage industry, the banking industry recognized this as good credit. You can even purchase a home if you're in between the 670 to 739 credit score, right? Now, if you are above that, so if you're at 740 to 799, this is very good credit. And honestly, I think maybe the average might be here. This is where most people might be, 740 to 799, like just cusp and excellent. And if you are in this range, good for you. Be excited because you are probably in the top 3%. Now, if you're at 800 to 850, that's considered excellent credit. And the truth is, in America, there's not a lot of people that has over 800, but it's good. I was at 800 and I went to purchase a car and my credit score went all the way down. That was in January of this year. So I shopped around and they said, oh, it's not going to be a hard pull. And I shopped at about 10 different places, dealerships, and came back to the dealership that I actually didn't need a credit score for because I had history with them. But anyway, it plummeted like 110, got knocked off, and then it came back up about 70, but we're working on getting that back over 800. Let me explain something to you. So some of you might say, my credit score is low, or I have no credit. I remember when, obviously I'm not from here, I came here as an adult, over 18, I had no credit. I didn't know what credit was. And I remember I wanted to purchase something at the mall. And they asked me, what is your credit score? Do you have a credit card? I'm like, what is that? So I had zero credit. And believe it or not, that had worked against me. It worked against me. Later on, and I didn't want to have any. I'm like, I don't want a credit card. Why should I have a credit card? You work, you pay your bills. Where I grew up, that's a way of life for us. Credit card was, I don't know, maybe in my mind, a rich people thing. The average person didn't have a credit card, certainly not where I was from. So when I came to this country, I did not have a credit card. I did not want a credit card, right? Until my sister and I, we went to rent an apartment. And lo and behold, because we did not have, at least I didn't, she didn't either, we did not have credit, it was considered bad credit. They needed to know that you existed with your social security number. They needed to know that you had the ability to pay your bills back, and you were. So that below credit, that no credit, is just as bad credit. So she and I, we had to go and get a credit card. And we started at the mall, Started at one store. Then we went to another store and another and another. I don't know about her, but before you know it, I was in debt. And that's exactly why I did not want a credit card. I ended up getting a whole bunch of them, and even getting an American Express. After my credit score went up, American Express And it wasn't that I wasn't paying my bill back, but I paid the minimum and I skipped a payment here or there because nobody taught me about credit. So if you're on this chat right now, on this podcast right now, or you're watching this on a replay and you said, I don't know about credit, nobody taught me about credit, please hang in there because you are one step ahead of me. I did not know. I did not know about credit until I totally ruined my credit completely. And you know what I did once I ruined my credit? I'm like, forget about it. I put on my darkers and I pretended it didn't exist. So it plummeted even worse. So if you have zero credit or bad credit, I will encourage you today to pay some attention. Pay some attention to that because there is a way to get back on track. And believe it or not, it's easy. It's not how much money you make. You can get your score up to 850 if that's your desire. Certainly up to that average number, which is the 670 to 730, 739. That is really easier than you know if you pay attention and you start doing the work. Okay? So if you're just joining, again, my name is Paulette Rolle-Alesnik. This is the Roll With It podcast. And on this channel, we talk about personal finances. That is how to make extra money, how to create and develop multiple streams of income, and how to increase your wealth. And ladies and gentlemen, I actually just wrote a book about that. That's how passionate I am about financial empowerment. So my book is available on Amazon.com. Just put in the title or my name. My name is at the bottom of the screen. Paulette Rolle-Alesnik. You would find my book, and my book is called, I'm not going to put it across the screen, but my book is called My Journey to Financial Freedom with MSOI. You might say, what is that, Paulette? Multiple streams of income. I just wanted to be cute or fancy, but you know what it did? It made a lot of people look it up, which means they'll remember me now. So I hope you get this book, that it will help walk you through, step-by-step strategies, a guide. It's really a guide for women, though a lot of men are buying the book. It's a guide for women who desire financial freedom now. If you want to have financial health, you want to have a better credit score, don't run away from it, rather run to it. It's doable, people. If you're at 300, if you're below 300, it's doable, but you must act by taking step 1. Okay, so what are the factors that determine this number that you have? Whether you're at 300, 600, 800, what are the factors? What do the lenders look at to determine why you have this number? So before I move forward, I do apologize. I should give you the entities, the companies that actually manage and determine our credit. That is Experian and Equifax. Those are the two major ones. So when lenders look up our credit, they actually take the score from Experian and Equifax, and they put it right down the middle and get an average number, right? That medium common number, and that becomes our credit score. So what are the factors that determine your credit score? There's 5 things that the lenders look at. This is not the only thing that determines your credit score, but it plays a major part in your approval and the credit terms you get plays a major part. Number 1, credit history. Remember I talked about us looking for an apartment? I had no credit history. So because I had no credit history, the apartment looked at my sister and I like, where y'all from? What planet y'all from? So to them, it was just as bad. No credit was like bad credit. So credit history is important. It's important for them to see that monthly payment on your credit history. Next, I would say payment history. Ooh. If you're just hopping on, you heard me talk about purchasing. I didn't share that, did I? I'll share that in a minute about skipping a payment and how it affected my credit. I tell you, it was horrible. But payment history is very, very important. Pay your bills on time. Now, how does it work and how does it affect you? Every month, you pay your bill. You have a due date. Let's say your due date is the first of the month. I'll use that because a lot of mortgage companies and car companies, people pay their bill on the first, right? Traditionally. Or the 15th because it coincides with the American paycheck system. Now, if you miss a bill, you have up until the 30th of the month to get it in there. If you're late, let's say it's due on the 1st, I'm sorry, or on the 15th, and you forgot, like I did that one time, or you didn't have the funds, do whatever it takes to make sure you paid by the 30th, because that's when they report. That's when the company, your car company, your bank, the credit cards you use, the store cards, that's when they report to these agencies, Equifax and Experian. So if you can just get it in by midnight, you'll just get across the line. And a late payment is better than a reported payment. So late payment, you will incur a fee. Whatever that fee is for that organization, it might be $29, $40. Right now it's ridiculous, right? These late fees are ridiculous. But even that late fee is better than having a strike on a late payment on your credit report. So number 3, it's the amount of credit you use depending on what's allotted to you. This is typically called utilization. So let's say they gave you $100,000. Depending on your history, how much money you make, they'll say you have $100,000 in credit. You get all excited and you go and use 100% of $100,000. Not good. It will affect your credit score. So you want to be less than 50% of what's allotted to you. If you're allotted $100,000, you want to use less than $50,000 on credit. Okay? Actually, they said 30% is absolutely the best benchmark as to where you want to be in the credit that's allotted to you. Now, most of you that are homeowners, you know that strike will go against you really quickly. As soon as you purchase a home, your utilization went all the way up because you're buying a home, $500,000, $700,000, $1 million these days. You get a 2.2 and it's it's $1 million at the time of this recording. So I hope that changes for us, right? So your utilization, number 1 again is your credit history, how long you've had credit. Number 2, your payment history, which determines how you've been paying on time. Number 3, utilization, the amount of credit you use versus what's allotted to you. Number 4, the types of accounts that you have. Now there are 2 accounts when it comes to credit cards. You have what's called an installment an installment account. I'm sorry. I'm getting tongue-tied. Now what is that? That is basically when you have a set amount awarded to you. A lender has said, we will give this individual a set amount of money and they will pay back continually a set dollar amount each month. Good examples of this would be your mortgage. It doesn't change, right? Your mortgage is always X amount of $1,000 per month. Your car payment is always X amount of dollars per month. So that's the install payment. If you bought a car for $85,000, according to your credit, they'll say, hey, you have to pay $759 or $1,102, whatever the number is. I'm just pulling random numbers out of the air. So that the installment is consistent. Monthly install payment every month until you pay that off. So that's just one of the accounts that you have. The second account is called a revolving account. This is when the lender says, we will give this individual an amount, a limit of course, but we'll give this individual a limit, a threshold. And they would pay that down. And when they pay that down, of course, we'll give them more. So let's say you have a credit limit of, let's say, $50,000. So you have the ability to spend up to $50,000 on credit. Your score is high, good credit history, good payment history, utilization. So you can spend all of that, which is going to max out your utilization. Oh, but still, you can spend all of it, and as you slowly pay it down, pay it down, pay it down, pay it down, they will add more to the pot. You pay it down, you pay it down, they will add more. So you have this revolving action happening. Okay, if you show yourself worthy of getting more, they would sometimes increase. And I'm gonna tell you one thing: sometimes the increase is not in your best interest. It's in the interest of the credit card company. Most of this is actually, but when they see that you are a spender, though you're paying it back, if they're getting interest off of you, they will increase that limit. So be careful with the revolving credit. Okay. Again, the two type of accounts are what? Installment and revolving. I hear you. I hear you. So those are the two types of account. The fifth factor that's a part of the decision making process, decision making for the lender, would be credit inquiry. This is when I talked about my car earlier. So they give you a certain amount of time within a year, believe it or not, to inquire, which means you go and you apply for credit. That's all it is. Let's say you go to Sears and you apply for Sears credit card. I don't even know if they're open. I don't know why that came up. But let's say you go to Saks Fifth Avenue, right? Nordstrom. You apply for a credit card, you apply for 2, you apply for 3. You go to Dillard's. That's one of my favorite stores. And you apply for credit. And you think it's like, it's okay. Right now, this is the holiday season, and that's one of the reasons why I wanted to do this card, because everywhere you go to shop, somebody will offer you a credit card. Ma'am, would you like to get that on a credit card? Well, do you have a credit card with us? No. Would you like to apply for one? You're going to get 20% off. I want you to politely say no. The same way you say you don't have one, that's the same way I want you to say you don't want one. No, but thank you, ma'am. Let them sum up your total, use the card that you have, or use the money that you have. Credit inquiry can really hurt your credit because they see you as somebody desperate. So whether you and here's the sad thing, you might get the card, the lender or lenders might give you the card, they might not. It doesn't matter. As long as you inquire, that's a hard pull on your credit. It is reported. And if they see more than 2 per year, if they see more than 2 pulls on your credit per year, which is not fair to me, but then I'm not Equifax and I'm not Experian. But that really can be a disadvantage to your credit. Okay, so I encourage you to pull at least 2. If you were just hopping on, you might have missed me share about my car. So I had to purchase a new car at the beginning of this year. And I went shopping. I was having a good old time, right? It was this rebellion thing. I actually didn't want to buy a car. I had an accident, so I was forced to purchase a car. And I'm fighting with the dealership, with my insurance company. And I'm like, can you just fix my car? I like that car. I like the payment. They wrote it off. Apparently, even the Mercedes, what is that thing called? The emblem, the thing in the front, that costs a lot, and that was bent. The airbag, everything. They're like, oh, it's going to cost, Miss Paulette, it'll cost too much. So they wrote my car off. I had to go car shopping. It was like some of the worst part. I just hated it. So I took a while and I'm shopping around. I'm shopping new cars. I'm shopping used cars because the price went up so much after COVID. I got my car, I think, around COVID. And the price had increased. I'm like, I don't know if I want to buy a new car. So I shopped both. And I kept shopping. And everywhere I went, they would do an application on me. And those dealerships, sometimes they lie. Just saying, oh, Miss Rolle-Alesnik, it's going to be a soft pull, or it won't be a pull. You know what? Within a month or so, my credit score went plummeted 110 lower than what I had. So I started with a little over 800 and it was way past like 700. I'm like, what? I haven't had such a low credit score since forever. So I'm panicking and I'm like, well, what's going to happen when I go to the other car dealership? Now they see a low credit score versus my 800 credit score, and then I'm going to get a bad interest rate, and I refuse to pay X amount of dollars because your credit score oftentimes the term of your credit, how much interest, they would charge. And I wasn't about that. So I'm freaking out. I'm like, oh my God. Anyway, so I'm sharing that with you. Like, I guess I should have known better not to trust them. They said, oh, it's going to be a soft pull. Oh, it's not going to show up on your credit. I believed them. Not good. It was holiday time, so I was in a good mood, I guess. So this was last Thanksgiving and Christmas, all of that holiday. I was without a vehicle because I was shopping. So don't believe them. If they said it's a soft pull, it's going to show up. If they said it's no pull, it's going to show up. If you give them your social security number and your address, it will show up on your credit. So I encourage you to do 2 or less credit inquiries per year. Otherwise, it's going to show up. Now, one thing I must say, like it plummeted 110. I remember that number because I was literally crying. But it did come up once I purchased my vehicle because they realized it was 5, 6, 7 inquiry for one purchase. So it went back up considerably. I would say a month and a half, 2 months, but still lower than it was. And I wasn't happy about that. I was not happy about that at all. And I still, at the end of the day, I end up going back to the same dealership I purchased my last 2 cars from, now 3 cars from them. And I honestly did not even need credit to go to them because I have purchase history with them. And one thing with this, I have a luxury brand car, is they trust you when you purchase directly from the dealership, especially if it's a new car. So they look at it was financed by them, so they look at that history versus pulling a credit. So I'm like, I should have just did that one stop. But I didn't. I made that mistake. Don't make the mistake I made. Just saying. So I hope this is helping you in your financial health, or as you move into Q1 as a business person, as you move into the end of the year. If you are, if you're not a business person, we call it different. We all have different terms for it. So business people, this is Q. Did I just say Q1? I do that. Q4. So for the entrepreneurs, business owners, this is Q4, and you're wrapping up. You have wrapped up your year already because the holiday is just upon us. So you're thinking everything has to be done. Everything. Q4, this is when you need to make sure you make as much money as possible before you close out the year on December 31st. For those of you who are not operating a business, in your mind, it is the end of the year, right? And you end up spending more money during this time of the year. Sometimes people spend 50, 60% more in 2 months than they do for the other months of the year. Why? Because of holiday. Holiday cooking, shopping, gifts, decoration, all the stuff we do for the sake of tradition. There's a song about that. So whatever it is to you, fall season, sweater season, for those of you that's further north, Q4, end of the year, I encourage you to think about your financial health, because financial health is important. Credit score, I would say, is the first step to financial freedom. It's impossible to have financial freedom if you are in debt, because you must first pay your debts. You must make sure that you're in the black before you can begin to save and much less invest, right? So when you think about financial health, it's first making sure you're out of debt. Now, you might have necessary debt. That's for another video, right? We have cars, we have homes. I do. So some people just live a whole life of cash. I find it advantageous to have a bit of debt. And I use some of my debt I leverage it actually for business. I really do. That can be for another video. But if you want to move towards financial freedom, like me, get out of debt, unnecessary debt. Definitely. That revolving debt, credit card debts, you want that gone. The installment debt is necessary for a lot of people who can purchase a house cash in America anymore. I mean, like the smallest home is probably starts at $250,000. So if you have a $250,000 to purchase a home, good for you. God bless you. Let's talk. We can talk about investing some of that cash because I do invest. The rest of us, you know what? We have a mortgage. Now, cars, I would say if you have the money for a car, do it for sure, for sure. Do it. If you don't, like, I'm single. One of the reasons I didn't purchase my car cash is because I'm going to tell you something bad. If I die, there's nobody for them to collect the debt from. And I'd rather keep that cash to give to my family when I die. I shouldn't think that way. But how are they going to collect money from a dead person? That's how I think. That's how I thought. But if you can purchase a car cash, go ahead and do so. Because they will come after the people who have, not cars, but homes. You know, the debt collectors will get their portion first before you can sell or before you can award anything to anybody. But again, thank you for hopping on. I'm going to just recap the things we went over quickly, and I hope this helps you with your financial health because I am so passionate. I promise you, I'm so passionate I'm passionate about making sure that women have financial empowerment. I want to be a global force for financial empowerment by teaching women how money works, by coaching them to take bold financial action towards taking bold action towards financial freedom. That really is a goal of mine. And I use the word global because I don't want to be limited to the continent that I'm on or the island that I'm on. I want to help women around the world to have financial freedom, to have financial health so that you're not so stressed. I know what that's like. I've been there. I've done that. Never again would I want to go back there. The pain that I see with women being stressed with their finances and not being able to maybe pay their bills, and that's it. You pay your bills and you have nothing left for nails and hair and makeup. Oh, I got a new makeup. I was just telling my sister I tried a new makeup. I found TikTok is the devil because I'm shopping on TikTok now. Like, what the world? But I saw this commercial on TikTok and they swear that it would match your color. And I said, I'm going to test it. I was expecting them to be off so I can return it. No, I'm telling you, that baby matched my color to the T. So anyways, my sister supplies me with makeup. She might have lost a customer. anyways, I totally got off just now. Oh, I'm going to recap. I'm going to recap for you. Thank you so much because I'm passionate about helping women. So do me a favor. If you like this content, please let me know by pressing like. And if you or someone you know can benefit from bettering their credit just by watching this, please share it. If you're watching on YouTube, please subscribe. Facebook, please follow me. It will help. Now, let's recap. What is credit? So credit, and I'm talking about the Western part of the world. Like, I can't talk about the rest of the world because I don't even know. If I know, I don't understand their credit system. So a credit score is a number designed to represent you and how well you pay your bills. If you have pen and paper, write that down. That's what credit is. Who are the major agencies? Equifax and Experian. You know, I'm sure I missed another one. There was a third one in there. I'm totally forgetting. So your credit score, once again, ranges from 300 to 850. We encourage you to be right in the middle actually not in the middle, but higher, on the higher end. Now, what does the numbers mean? I want you to write this down if you didn't before. If your credit score is between 300 to 570, you know what? We got to work on that. We got to work on that. We got to work on that. So the lenders are not trusting you just yet. I'm saying yet because you know what? We're going to get that up. Miss Paulette is here to help you get your credit score where people trust you, because credit score equals, reputation. It equals trust. Now, if your credit score is 580 to 669, it's fair. They're starting to say, okay, we see her, we see you, right? So they're starting to pay attention, and they will even lend to you. But the sad thing is, let me use this as an example. They would give you a card or sell you a car. But the sad reality is we're buying a pumpkin today, right? So with a credit score that is fair, what happens is, why is it all crooked on this camera? That's the conundrum. What? So the sad thing is they will give you a credit card. They'll say, girl, buy this pumpkin. Look at it, so white and pretty with a gold top. You buy that pumpkin for $100. So this costs $100, and because of your low credit score, you probably have to pay $39, $49. The interest rate is crazy. So you would just be buried in interest rate. So I would encourage you, you cannot pay, if you have a low credit score, buy cash right now until you bring that baby up, because interest rate is the devil. Now, if your credit score is from 670 to 739, this is where you're starting to have traction. This is where you're starting to get favor. This is where it's moving. Things are moving in your favor, in your interest, because the lenders, they're starting to pay attention. Like, yeah, that's okay. We understand life is not perfect, but this is good. So good credit is good. It's not, you can be better than that, but good credit is good. The mortgage companies, car companies, I think this is maybe, like I said, the average, where average Americans are. They consider this good, and you can get better interest rate. Now, where you can do even better is if your score is from 740 to 799. That's very good. You get a check mark. You get lower interest rates, right? And if it's from 800 to 850, like where mine was before I purchased this last car in January, that's considered excellent. Like, yay! That's excellent. So the higher, if you remember nothing else from this video, the higher your score, the lower your interest. And interest is what gets most people. You pay that interest. You pay that interest, you think you're paying off your credit card, but you're paying the interest, and the interest sometimes is higher than the payment. So the higher your score, the lower the payment. So remember that. And lastly, something I want to leave you with is payment history. Whatever you do, pay your bills on time. Let your kids go through the free lunch line and take that $25, even if you have to pay the minimum, and pay your bill on time. I would encourage you not to put it on credit if you can avoid it. But if you must, I understand life can be hard sometimes, or people just have the best intention that kind of went sideways. But whatever you do, for the history, for your credit history, pay your bills on time. And the truth is, if it's due on the 1st or the 15th and you're late, you will get a late fee. You paid it off, no reporting. But you must pay before their cycle ends. And normally, like most of mine are on the 30th, they end by midnight on the 30th. You want to get your minimum payment in Because once that hits and they report it, when I tell you your score can drop 100 points from one late payment, even if the late payment is just a $10 payment or $20 payment. So you want to pay on time. You want to make sure increase your credit so you can get lower interest and do not go into debt with these credit cards. If you have questions, I'm available. Put them in the comments, chat, whatever below. I would get back to you. And once again, like I said, I appreciate you hopping on. My name is Paulette Rolle-Alesnik. This is the Roll With It show, or Let's Roll With It show. And here we talk about personal finances. That is how to make extra money, how to create and develop multiple streams of income, and how to increase your wealth. In order to increase your wealth, you must start with your credit score. I hope this makes sense to you. Thank you. I hope to see you again. I try to go live every so often. Thank you for coming on. Bye now. Bye-bye. Thank you for hopping on.